You're fired. In a late-night letter posted to Truth Social, President Trump upping his pressure campaign on the Fed. Welcome to the Big Money Show. I'm Brian Bremberg, along with my co-hosts Thomas Hayes, Marcus Lemonis, Lydia Hu, and joining us for the hour, Making Money host Charles Payne. Welcome, one and all. President Trump moving to fire Fed Governor Lisa Cook due to her, quote, deceitful and potentially criminal conduct concerning alleged mortgage fraud. Her response: I will not resign. I will continue to carry out my duties to help the American economy as I've been doing since 2022. Federal Housing Finance Agency head Bill Pulte says Trump has ample cause.
This is a very serious crime, mortgage fraud. It carries up to 30-year prison sentences. I believe the president has ample cause to fire Lisa Cook. Whether he wants to do that or not is entirely up to the president. However, we will go where mortgage fraud is. If mortgage fraud is with a Republican or a Democrat, it doesn't matter. If you commit mortgage fraud in President Trump's America, we're going to come after you. And Lisa Cook is no exception to that.
And Cook's attorney, Abby Lowell, just came out and said that Lisa Cook will fight this. Of course, Abby Lowell from Hunter Biden fame. So, Charles, I go to you first. We talked about Lisa Cook over the past week, talked about the charges. The president has moved. She's going to fight. What do you make of all this?
I think one of the interesting things is everyone kind of talks about the standing of the Federal Reserve and, you know, not to make a mockery of the institution itself. We just had 3 major Fed officials not too long ago resign over the stock trading situation, which ironically the IG found them all not guilty of violating any sort of thing, although that was the Fed IG. So, you know, that brought out additional scrutiny. But still, the point is, none of them necessarily fought. And ironically, if they did fight, they would have been found not in violation. But they didn't because they wanted to protect the sanctity, if you will, of the Federal Reserve, which, by the way, this Powell Federal Reserve is the most unpopular ever. Not too long ago, I think it was Pure Gallup took a poll. And so Americans are losing faith. And they're losing faith in the entire system, to be quite honest with you. But certainly in that, so in my mind, I would have preferred to have seen her resign. I just don't believe Bill Pulte it would have gone out there saying that there's mortgage fraud if there wasn't something very, very suspicious. That, to the average person, would look really wrong if someone watching this show did it.
Lydia, bring your lawyerly perspective to this. So I think Lisa Cook is saying, this is not cause for me to be fired. It's the cause issue. Now, I look at it as a non-lawyer and say, well, if you lied on your mortgage application and you're a regulator of those kinds of things and you have charge over interest rates, which is what that whole thing is about, that seems like cause to me. What do you think as a lawyer?
You know, this breaks out into 2 very kind of clear, clean issues, I think. One is whether or not we have cause for President Trump to remove her. And the statute is really clear. In order to remove a Fed governor, you have to have cause, some type of malfeasance. So here, the issue is that we have allegations of wrongdoing, right, coming from Bill Pulte, another agency head. He is accusing her of mortgage fraud, and he's referring that over to the Department of Justice. But as of now, she's not been charged. I don't believe the DOJ has opened up a formal investigation into this just yet. So whether or not that rises to malfeasance or for cause for termination is an open question. The statute does not define it. No case law has defined this so far. So this is a novel question that would be presented for the courts. So setting that to the side, because I think you can actually argue that issue either way. The secondary question is whether or not she would be able to continue to serve in her role even as President Trump is trying to remove her. And there's been some interesting decisions from the Supreme Court just over the past couple of months on that very issue, in which they allowed him to remove, you know, an agency official from the National Labor Relations Board and also from the Merit Systems Board, saying they can be removed while they're also litigating the underlying claims to keep their job. Needless to say, we're in uncharted territory, and the President Trump is doing everything he can to hype up this pressure on the Fed. Does it really matter what happens here with Lisa Cook? I actually think it doesn't. I think he's doing his job just by hurling the allegations, by having Bill Pulte out here accusing her of wrongdoing. He's accomplishing what he wants, which is a total revamp and scrutiny of the Fed.
President Trump, the chief executive, fires somebody who he says he has cause to fire. Do you agree with them?
You're setting policy, monetary policy inside of a company. If somebody is setting policy for the company, but their own behavior doesn't line up with the policy setting, it's a problem. I want to go back to Charles's comment about being popular, not being popular. Not being popular for anybody that may be on the other side isn't about where the interest rates are. It's about the way you're looking at monetary policy. Do you agree with that?
From the general public's perspective?
Well, nobody likes high rates. So does that
Right.
make you unpopular, or
Right.
is that just good monetary policy?
I honestly, I think one of the things that's tarnished this Powell Fed is the transitory situation.
That's right.
Which I think the average person does understand. And most people felt like, hey, my man, you haven't been to a grocery store. And so I think he lost a whole lot of credibility within the financial community and outside of the financial community.
When you make decisions that affect my family's income or my cash flow and you don't seem like you're in touch with reality,
Right.
that's when you become
Exactly.
unpopular.
Well, or you're in touch with realities that you shouldn't be, like fighting climate change or DEI policies. The Fed's job is not to do that. I think a lot of people outside the Fed say, you've been focused on the wrong stuff and you screwed up the stuff that actually does affect my pocketbook. But Tom, I want to ask you about markets. I don't think markets care. You know, there's this whole conversation of like the Fed's independence is being jeopardized here. The president, you know, is kind of using a side door to get control. Maybe the market's just like low interest rates, and that's what they think they're going to get. Or maybe they actually think, you know what? If this person can't do a mortgage application, they shouldn't be on the Fed board.
Right. Well, the irony is if she had just voted to lower rates, she could have refinanced and not had this problem. But leaving that aside, she certainly understands interest rate arbitrage. You know, if the allegations are true and you fill out one application and the second one you say it's a primary, you get a lower rate on that, so she's making a vig on that, that is unacceptable if these prove to be true. So what's happening is we've got the most dissenters that we've had in over 25, 30 years. You got Bowman, you got Waller, you got Miram now, they're gonna push through before the September meeting. If she's out, you've got 4 dissenters. Powell seems to be shifting gears since Friday. This is very constructive for the market. The market loves it. All the laggards, the small caps that have been neglected, the unmagnificent 493 that need to refinance at lower rates to get the economy booming, are going to benefit from this. So this is all a step in the right direction. Powell seems to be moving in the right direction, but if not, Trump's got him surrounded now. He's got all of these dissenters.
Game theory at its
As
finest.
Lydia said, it doesn't even have to be true anymore. It's the game theory of just creating the doubt.
But you know what? So I'm going to go back to that. And Charles, ask you, because you mentioned the unpopularity. I think there's a lot of Americans who look at an institution like the Fed and say, this is an organization that has never been accountable to the American people. And maybe by design, it's not supposed to be,
Right.
okay?
Right.
But it's this double standard of these guys can do these shenanigans, like fudging a mortgage application, and then they have the audacity to say, I'm being bullied about that, rather than saying, my goodness sakes, that's an egregious mistake. Man, I should have fixed that. I'm so sorry about it. She says she wants to fight it because she's being bullied. That, to me, is pouring fuel on her own fire right now, and I don't think Americans look kindly on that. What do you think?
She's a Kamala Harris acolyte, an Obama acolyte. Her whole position from here on out is going to be about politics. Remember when she was being pushed in and she was approved with the 50-50 tie, Harris had to get her through. You know, it was about being the first black woman. You know, all these other issues are going to be brought in. This is being created. They're creating something that has nothing to do with this, but everything to do with the next election. Trump's war on black women, Trump's war on black people, that kind of stuff. This whole thing right now is way past, you know, whatever else. And, you know, as far as the Fed is concerned, if you think about when Woodrow Wilson was not even a fan, he wasn't going to go through with it. I'm not sure what kind of back deals they put through, but this was supposed to end cycles. It was supposed to end the boom or bust cycles. In the 1800s, we had 4 panics, which were the equivalent of Great Depression. Then we had one in the early 1900s. This was promised. Elasticity of money. We'll never have another massive boom-bust cycle again. And, of course, we've only had a whole bunch of them since then. So the Fed in of itself has been a failure from its own mandate and promise from day one. I think the first big mishap was in 1920. So we've had a series of situations where the boom and bust have gotten worse. And really particularly for Main Street. And then you get the Fed policy. Who has it really ever been designed for? We keep hearing people who don't want lower interest rates. Well, if you lower rates, the market's going to go higher. Guess what? We're at all-time highs. Home prices, all-time highs. Gold, all-time highs. Bitcoin, all-time highs with restrictive rates. Stop acting like you care. When we go lower, guess what's going to happen? Market, all-time highs. Gold, all-time highs. So something is wrong because the entire institution was designed for wealthy bankers and everyone in that level. That's it. The gig is up. It's all over. Now, here's the other part of that. Their mandate has grown. It's grown.
Well, they've grown it themselves in a lot of ways.
They've grown it,
right?
but listen, with the CFPB, in 1977, Congress gives them the mandate. It was Congress's mandate all the time. Full employment. That was Congress's job. They gave it to the Fed. Everyone gave the Fed more and more things to be in charge of, more and more things to be in control of, and that's why this matters. In 2023, they put out a white paper, 22,000 cases of mortgage fraud, the same one that Lisa Cook is accused of. So this is all part of their purview.
Yeah, let's come back to a little bit on the monetary policy, right? The easing of rates really does two things. It frees up household income, but what it does is it spurs capital investments. And so you have this tariff war going on around the world, and President Trump wants us to make things in the U.S. You look at the furniture tariff from Friday.
Right.
Want to make things in South Carolina, North Carolina, Michigan. That takes money to do that. And when you're looking at a lot of companies with corporate debt out there and the interest rates being what they are, not a lot of companies have a lot of free cash flow to start building
Especially those small companies, smaller companies.
That's right. Small, medium, and large.
Right.
You could have $1.2 billion of debt. I have $1.2 billion at Camping World. You lower the rate, it saves me $4 million. That $4 million gets invested into either a new location, hiring new people, doing new things. It's the same policy everywhere. And I think what President Trump may need to better articulate is that the monetary easing that he's looking for is to create more income for homes, for homeowners, and more available capital to invest.
And create more homeowners.
That's right.
And also, but let's not forget the debt we all share, the government's debt.
Right.
Yeah.
$1 trillion. Hey, how about we bring that down?
That's refinancing.
Yeah.
And there's trillions trapped in home equity that consumers want to get out. They can't get out at these rates. You lower rates, you're going to see that unleashed into the economy. The consumer is going to be stronger than ever before.
Is that a good thing?
Well, listen, it's not a bad thing. First and foremost, having the extra income, having the flexibility to do more things. Businesses refinancing debt is key for small business, key for employment. And housing is 16% of GDP. Okay, that's been in jail. No one can move on housing. You can't take risk on land if you're a developer because you don't know what rates are going to be. Once we come down to the neutral rate, which is 100 basis points lower, housing's going to boom. It's going to create a lot of high-paying jobs. It's going to create a lot of velocity in the economy. And Main Street wins from that, not the rich bankers. Main Street's going to win if housing wins.
Okay, I like the way we're getting started on this panel. We don't need any caffeine on this panel.